What if I told you that the traders who earn billions don't predict the future better than you? They just manage the present better than anyone else. That their greatness doesn't come from genius, but from how they handle being wrong over and over without ever losing control. You've been taught to think success in trading means being right. That if you could just call tops and bottoms, if you could just guess the news or time the turn, you'd finally make it. But in Hedge Fund Market Wizards, Jack Schwager blows that fantasy apart. He interviews some of the most successful traders alive, people who've made hundreds of millions or more, and what he finds is shocking. They're not gods, they're grinders. One after another, these traders admit it. They lose a lot. They're wrong often. Some of them, like Michael Platt or Ray Dalio, talk openly about being wrong more than half the time. But here's the difference. They don't collapse when it happens. They don't freeze. They don't hope. They adjust. And that adjustment is what separates them from everyone else. You want to be a trading wizard? Then start by killing the fantasy. You're not here to be right. You're here to manage risk, to control damage, to stay alive long enough for your edge to play out. One of the clearest patterns Schwager uncovers is that none of these traders worship their ideas. They all have conviction, but it's flexible. They aren't married to a thesis. They're married to survival. And that distinction is everything. Cole O'Shea, a macro trader profiled in the book, says it flat out. If I find myself hoping, I get out. Let that hit. Hoping is the enemy. If you're sitting in a trade, praying for it to bounce, you're already losing. Maybe not on the chart, but definitely in your head. The greats don't hope. They observe. They listen to the market. And when the market tells them they're wrong, they don't take it personally. They just move. Mark Douglas preached the same in Trading in the Zone. You can't control the market. You can only control yourself. The market wizards prove that this isn't theory. It's practice. It's the difference between a blown account and a 30-year career. And here's the beautiful paradox. The less you need to be right, the more successful you become. Because when you stop fighting the market, when you stop defending your ego, you can finally focus on what matters: execution, process, discipline. Some of the traders Schwager interviews use technicals. Some use fundamentals. Some are quants. Others trade on gut. But none are rigid. What they all share is the ability to lose and not break, to lose and keep executing. That's your goal. You've probably had days where you blew up over one trade, one thesis, one stubborn belief. That's what these traders avoid at all costs. They've built systems, routines, and mindsets to protect themselves from themselves. Because the market doesn't destroy traders. Traders destroy themselves through overconfidence, through fear, through refusal to exit. And the wizards? They've learned to avoid that trap. So here's your first wake-up call from this book. Genius is a myth. What wins in the long run is composure, resilience, self-mastery. Your job is not to be right. It's to be wrong well. Start journaling your mistakes, not with shame, but with curiosity. Where did emotion creep in? Where did you ignore price? Where did you hold when you should have cut? Track these like they're the blueprint to your freedom, because they are. And as you keep going through this book, you'll see a pattern. The styles change, the markets change, but the core behaviors don't. They adapt, they protect capital, they stay in the game. That's the real magic behind the wizards. And it's something you can build too. Next, you'll see just how different these traders are from each other, and yet how they all share a core psychological framework. It's not the system, it's the self. From global macro giants to systematic quants, Schwager interviews traders who couldn't be more different in style, but their mindset, strikingly similar. You start to realize that success isn't about your strategy. It's about your psychology, your process, your ability to stay in control. In Hedge Fund Market Wizards, you meet traders like Edward Thorpe, mathematician, blackjack counter, systematic hedge fund pioneer. Then there's Scott Ramsey, a pure quant. Contrast that with someone like Cole O'Shea, a discretionary macro trader who relies heavily on market interpretation and timing. These styles couldn't be more different, and yet they all win, repeatedly. How is that possible? Because the edge isn't in what they trade, it's in how they think, how they manage themselves. Schwager highlights this repeatedly. While their markets vary, they all execute from a place of self-awareness, discipline, and control. That's the pattern you have to absorb. They're not trying to beat the market with brilliance. They're trying to survive long enough for their edge to pay off. This is your next level. Stop obsessing over finding the perfect strategy. There isn't one. What you need is a strategy that fits your personality, your psychology, your capacity for risk. And then, master that. Ray Dalio built Bridgewater on macro principles. Jeff Yass leveraged options pricing inefficiencies. Larry Benedict made his millions shorting in bear markets. None of them used the same tools, but they all had something in common: a deep commitment to their own process. Have you chosen your process? Or are you still hopping from setup to setup, hoping something finally clicks? Schwager makes this painfully clear. Every wizard spent years developing their style. They didn't copy someone else's edge. They discovered what worked for them through experimentation, mistakes, and iteration. That's what you must do. And the core behaviors? They align. They all cut losses fast. They never let one trade define them. They all journal obsessively. They all treat trading like a business. They all show up like professionals, win or lose. This isn't optional. It's foundational. Even in interviews where the styles diverge, like macro versus quant, you hear the same language. I don't chase. I scale up only when I'm right. My risk comes first. That's not strategy. That's execution behavior. Brett Steenbarger echoes this in his performance coaching. Elite traders may use different methods, but they all operate with the same underlying principles: patience, focus, process. Let this sink in. You don't have to be anyone else. You don't need to copy a hedge fund, but you do need to figure out your own edge and stick to it like your financial life depends on it, because it does. Build your system based on your strengths. Are you analytical? Consider quant or data-driven models. Are you intuitive? Maybe discretionary technicals work for you. Either way, commit, refine, execute. The market wizards weren't born with it. They built it, slowly, deliberately, through trial and error. You can too. And the sooner you stop chasing strategy and start mastering psychology, the faster you'll find traction. Because what ties these wizards together isn't the same setup, it's the same structure of thinking. They think in terms of probability, not certainty. They manage risk before reward. They protect their capital like it's sacred. That's your shift, from how do I win more to how do I lose better, from what's the best strategy to what system fits me best. And that shift changes everything. In the next section, you'll dive into one of the hardest truths of trading. Risk isn't a number, it's a mindset. Because your ability to win comes down to one thing: how well you lose. Every trader thinks they understand risk until it punches them in the face. What separates the wizards from the rest isn't just how they manage risk technically, it's how they think about risk emotionally, structurally, and behaviorally. And that mindset is what keeps them in the game. You probably think risk is just about stop losses and position sizing. But if that's all it was, every trader with a trading app would be rich. The truth? Risk is psychological. It's emotional. It's invisible until it explodes in your face. In Hedge Fund Market Wizards, Schwager interviews legends like Jaffray Woodruff, who runs data-heavy systems, and Marty Schwartz, who made millions off discretionary setups. They both treat risk like it's oxygen. They don't gamble. They protect. Their entire mindset is built around preservation first. Think about that. How often have you risked more on a trade just because you felt good about it? That's emotional risk management, and it's deadly. The wizards don't risk what they hope will work. They risk only when the data supports it. Even then, their risk is tightly contained. Many use rules like, I never risk more than 1% on a trade, or I cut if the trade goes against me by X ticks, no exceptions. But it goes deeper. Risk isn't just a number. It's your relationship to uncertainty. These traders understand that anything can happen. They expect randomness. They don't predict, they prepare. Paul Tudor Jones said it bluntly: don't focus on making money, focus on protecting what you have. That's risk mindset. That's the edge behind the edge. Let's go deeper. Risk also means knowing when not to trade, knowing when your setup is weak, knowing when you're emotionally compromised. Schwager highlights how many traders had built-in stop conditions, not for their trades, but for themselves. That's next-level execution. Bruce Kovner, one of the most disciplined traders Schwager ever interviewed, once said, I know where I'll get out before I get in. That's real. That's professional. That's what you're here to build. So how do you apply this? First, get brutally honest about how you size trades. Are you risking what you can afford to lose psychologically or just mathematically? Because if a loss blows up your focus, it was too big. Second, predefine every exit. Before you click, ask, where do I get out if I'm wrong? And can I live with that? If the answer is no, don't enter. Third, track your emotional risk. Are you trading after a fight, a win streak, or a loss streak? Are you trading out of fear, greed, or boredom? These are risk events, period. The market wizards don't just manage capital, they manage mental capital. They stay sharp by protecting their state of mind, and that makes them lethal over the long term. And here's the most powerful insight from this chapter. Your risk tolerance changes with your psychology. When you're centered, risk feels clear. When you're off balance, risk becomes distorted. That's when you make mistakes. That's when small losses turn into spirals. Jared Tendler calls this emotional tilt. It's the breakdown that happens when emotion hijacks your execution. The wizards avoid tilt by design. They pre-commit, they track state, they pause when needed. You need to do the same. Because the goal isn't to avoid risk, it's to build a healthy relationship with it, to respect it, to engage with it systematically, to know where your edge ends and where danger begins. When you shift from fearing risk to mastering it, you stop trading defensively. You trade strategically. You think long-term. You position like a professional. And the moment you do that, everything changes. You stop being a gambler. You become an operator. Because your job isn't to eliminate risk, it's to price it, manage it, and own it. And when you do, you'll finally be free to build the one thing that actually pays in this game: a repeatable process. That's what's next. The wizards don't obsess over being right. They obsess over doing the right things over and over. Prediction is fantasy. Process is power. You learn that what makes these traders great isn't what they know, it's what they do. Every single day. You've probably had days where you nailed the direction, perfect entry, clean setup, but still lost money. Why? Because you broke process. You hesitated, you oversized, you didn't follow your own plan. That's what separates winners from amateurs. Not prediction. Execution. In Hedge Fund Market Wizards, this theme repeats with surgical precision. Almost every trader Schwager interviews talks about process like it's sacred. They aren't out here making bold forecasts. They're following systems, frameworks, rules they've refined through years of pain. Cole Moshe said, "I don't try to predict the future. I try to react to the present." That's what a process-driven trader sounds like. You're not trying to know. You're trying to respond. Scott Ramsey, the quant trader, explains how his models aren't built to predict perfectly. They're built to perform consistently over thousands of trades. He doesn't care about any one trade. He cares about aggregate execution over time. Now compare that to most retail traders. They're fixated on the next trade, the one winner that'll fix everything. But the wizards? They don't care about the next trade. They care about the next 1,000 trades. Because that's how process works. And that's your pivot point. Start thinking in series, not in single outcomes. A losing trade doesn't matter. A losing pattern does. A winning trade doesn't mean you're good. A winning process means you're growing. Schwartz made millions trading technicals, but what made him unstoppable was his commitment to structure. Pre-market prep, post-trade review, strict position sizing. His system was boring, repetitive, but it worked. Because that's the truth most traders avoid. Process is boring. It's not sexy, it's not high drama, but it's what gets you paid. Jared Tendler calls this automation through discipline. The goal is to get so consistent with your behaviors that execution becomes reflex. No hesitation, no overthinking, just action. And the only way to get there is through brutal repetition. So here's your next move. 1. Build a checklist. Entry, exit, size, risk, context. 2. Follow it without exception for 20 trades minimum. 3. Review every trade, not for result, but for compliance. This is your new religion, not entries, not indicators. Execution consistency. And when it gets hard, when you're tempted to skip a step, to improvise, to trust your gut, that's when the process matters most. Schwager makes it painfully clear. The wizards don't feel their way into trades. They earn the right to act through preparation. Whether it's technical, fundamental, or quantitative, the behavior is the same. Predefined conditions, predefined exits, zero guesswork. This is what transforms you from a screen watcher into a trader. Because let's face it, when you trade from emotion, you're inconsistent. And inconsistency is what kills your edge, your confidence, your account. So how do you protect yourself? You lock in your process. You make it your baseline, your accountability partner, your safety net. And over time, the process starts to feel like power. Because while other traders are reacting to noise, you're anchored, grounded, focused. And that's when the results start compounding. One of the most powerful quotes in the book comes from Larry Benedict. "I'm not trying to be smarter than the market. I'm just trying to stay consistent." That humility, that consistency, that's what builds longevity. So here's your wake-up call. Stop chasing the win. Start chasing the repeat. Build the habits that make success inevitable, not occasional. Because the market doesn't pay you for brilliance. It pays you for repeatable execution. And once you master that, once you internalize that your real job is to follow a process, you unlock the door to something very few traders ever reach: emotional control. And that's where we're headed next. Even the best system collapses when emotions hijack it. The market wizards don't eliminate emotion. They master it. They prepare for fear, manage greed, and protect conflict capital. Emotional control isn't a bonus skill. It's the core of elite performance. You felt it. The rush of a winning trade. The panic of a loss spiraling faster than your plan. The need to make it back. That surge of dopamine. The sharp crash of regret. These aren't random feelings. They're predictable distortions. And if you don't handle them, they'll handle you. In Hedge Fund Market Wizards, Schwager doesn't just ask about trades. He probes how traders react under stress. The answers are brutally honest and astonishingly similar. Take Tom Cloggis. He said, "If I'm emotionally upset, I stop trading." Simple, hard, effective. Because when your emotions are running the show, your plan becomes irrelevant. And when your plan is irrelevant, so is your edge. You're not trying to feel nothing. You're trying to feel and still execute. Every wizard builds systems to prevent emotional sabotage. Some use daily routines to ground themselves. Some journal every trade to process emotionally. Some use meditation or visualization. Some just step away when they feel the temperature rising. What they all share? Awareness and rules. Have you built rules for your mind? What do you do after a big win? A big loss? A revenge trade? How do you reset? Most traders don't know because they don't plan for emotions. They think discipline will kick in when it's needed. It won't. Discipline is a structure, not a feeling. That's why the wizards create playbooks for emotional moments. If I'm up X, I reduce size. If I'm down Y, I pause. If I feel tilt coming on, I walk. They act before the spiral begins. Because tilt isn't just a poker term. It's a trading disease. One moment you're in control. The next, you're clicking like a maniac, trying to fix something that wasn't broken. And then your account bleeds. Jared Tendler breaks this down in his mental game framework. Emotion is just information until you attach meaning. The greats see fear not as a threat, but as a signal. Something's off. Time to slow down. And greed? That's just false urgency. You don't need to chase a move. You need to trade your plan. One of the biggest killers Schwager exposes? Overconfidence. After a win streak, most traders relax their rules. They size up, they trust their instinct, and that's when they blow up. The wizards avoid this by respecting randomness. Even when they're hot, they act like the market could turn now. That humility keeps them focused, and that focus protects their capital. You need the same humility, the same self-awareness. Start tracking your emotions like you track your trades. Every entry should come with a mindset check. Am I focused? Am I following rules? Am I acting or reacting? Schwartz, one of Schwager's classic wizards, used to record how he felt before and after trades. If he felt too euphoric, he cut size. Too nervous, he stepped away. His edge wasn't just technical. It was emotional intelligence in action. And over time, that emotional mastery becomes your true alpha. Because systems can be copied. Signals can be stolen. But emotional control? That's earned. And it doesn't come from meditating once. It comes from routine, from reflection, from repetition. So build a post-trade ritual. Ask yourself, did I follow the plan? Did emotion interfere? What would I do differently? And write it down. Over time, that feedback loop will train your nervous system to stay calm under pressure. Because when others panic, you'll pause. When others chase, you'll wait. And when others tilt, you'll execute. That's the real edge, not some secret indicator, but your ability to stay composed when the pressure spikes. And when you've built that, you're ready for the next level, owning who you are as a trader, finding your style, honoring your identity. That's the long game. And that's what's next. The Wizards didn't stumble into their trading style. They earned it through years of searching, testing, and failure. Finding your trading identity isn't optional. It's essential. And once you know who you are as a trader, everything else gets sharper. You've probably tried to trade like someone else. Maybe you copied a breakout strategy, forced yourself into scalping, mimicked a macro view you didn't understand, and it felt off, like wearing someone else's skin. That's because trading success isn't about what works. It's about what works for you. And Schwager proves it. Across Hedge Fund Market Wizards, you meet traders who couldn't be more different in approach. Some are short-term gunslingers. Others sit on trades for months. Some rely on spreadsheets. Others use gut. What unites them isn't the method. It's the alignment. They know their strengths, their weaknesses, their natural tempo. They know if they're meant to hit quick setups or grind long themes. And they design systems that reflect that. Larry Benedict trades with intense short-term focus. He's in and out day after day, managing risk on tight timeframes. Ray Dalio, on the other hand, builds giant macro frameworks based on policy, cycles, and correlation. Same goal, different personality. And both win because they honor their style. So here's your call-out. Do you know what kind of trader you are? Not what sounds cool, not what gets attention, but what you can execute consistently under stress. That's your trading identity. And the Wizards didn't find it overnight. They tested everything. They blew up accounts. They changed styles. Some even left trading and came back with new insights. But every step moved them closer to their true form. That's the game you're in. Exploration, repetition, evolution. Mark Minervini talks about how early in his career, he tried to be everything at once. It wasn't until he narrowed in on momentum trading with very specific risk rules that he exploded in consistency. This is how mastery works. You cut everything that isn't you, and what's left, that becomes your edge. Start tracking your trades not just by results, but by how they felt. Which ones felt calm? Which ones felt forced? Which ones triggered emotional spirals? Over time, patterns will emerge. That's your identity revealing itself. And here's the key. Once you find it, build a system around it. Structure, routine, rules. Don't leave it abstract. Solidify it with daily habits. The market wizards all have frameworks that reflect their identity. Some begin their day with meditation and chart review. Others run code and filter for volatility. Some avoid news altogether. Others eat it for breakfast. What matters is consistency and fit. Jared Tendler's mental game model highlights this too. Performance improves when action aligns with internal wiring. If you're intuitive, don't force rigid systems. If you're analytical, don't chase price. Trade who you are or blow up trying to be someone else. And here's a deeper truth. Your identity evolves. What fits now may shift as your capital, mindset, and lifestyle change. That's okay. Just keep adjusting your system to reflect you now, not you last year. You're not trying to be timeless. You're trying to be true, and truth compounds. Once you've locked in identity, decision-making becomes lighter. You stop second-guessing. You stop chasing noise. You start filtering fast, acting clean, recovering quick. And that's where consistency lives. So do the work. Write your style out. Define your risk tolerance, your preferred setup, your timeframes, your max size, your emotional tendencies. Make it a living document. Refine it weekly. Because when you know who you are, you stop looking for magic. You start building process. You stop forcing trades. You start owning them. And from that place of identity, something incredible happens. You earn the right to innovate, to break your own rules intelligently, to adapt without losing edge. And that's what's coming next. The best traders follow rules until the moment they don't. But when they break the system, it's not out of impulse. It's earned through years of pattern recognition, deep intuition, and total process immersion. You'll learn how and when to break the rules and when not to. You've probably been told, stick to your plan. And yes, that's true, especially when you're still developing consistency. But here's the twist. The market wizards sometimes break their own rules, but they do it with intention, not emotion. This isn't recklessness, it's adaptation. In Hedge Fund Market Wizards, Schwager digs into moments when even the most disciplined traders made exceptions, but only because they were reading something deeper than the setup, something they'd seen 10,000 times before, something the data didn't say, but their pattern memory screamed. Michael Platt, one of the most successful hedge fund managers alive, talks about how over time he developed a feel for trades that had asymmetric risk, even when his models said no. He'd seen these mispriced opportunities before. He knew the texture, the behavior, the hidden edge. But don't get it twisted. This intuition wasn't guesswork. It was built through years of reviewing, logging, absorbing patterns. This is the line you need to see clearly. Are you breaking rules from mastery or from mood? Breaking rules from mood is how you destroy your edge. But breaking rules from deep awareness, that's how you evolve it. Paul Tudor Jones famously cut his size in half after winning streaks, not because it was in a rule book, but because he knew his own psychology. He could feel the creeping overconfidence, so he didn't double down. He cut back. He broke the rule of momentum scaling to protect himself. That's elite. And you have to earn the right to improvise, to bend rules without breaking your process. That only comes after hundreds of trades where you proved you could follow structure under pressure. You can't freestyle if you haven't mastered the form. So when does it make sense to break the rules? When the market regime has changed and your system hasn't caught up. When a known edge presents itself outside your usual filters and you have historical confirmation. When you have changed and your process no longer reflects your evolved psychology or skill set. When capital constraints or opportunity costs demand a temporary override with risk tightly managed. But even then, it's done intentionally, with boundaries, with risk caps, with awareness. Most traders break rules because they want excitement, because they're bored, because they want to prove they're back. That's ego. That's how you blow up. The wizards don't do that. They're surgical. If they break form, it's with structure. If they pivot, it's with preparation. So what's the takeaway? Build your system, master it, execute it flawlessly for 100 trades. Then and only then, start tracking exceptions. What do you feel that the system misses? What market shifts are you noticing before your filters do? Document those instincts. Analyze them. Over time, your process will begin to absorb your intuition. It will evolve, not from emotion, but from edge. And that's the phase where you start playing at the highest level. Because trading isn't about obeying rules blindly. It's about knowing when to trust the system and when to trust yourself. But that trust has to be earned with pain, with review, with patience. And when you can walk that line between structure and spontaneity, you become something most traders never become. Adaptable without being impulsive. That's the secret to longevity. And to get there, you need one more thing: resilience. Because you will fail. You will crash. And the next section shows you how the wizards faced their darkest moments and came back sharper than ever. Every wizard has faced deep drawdowns, brutal losses, even career-ending collapses. But what made them great wasn't avoiding failure. It was what they did next. They obsessed, they rebuilt, they evolved. And in that process, they became unstoppable. You think success is a straight line? Look again. Read the stories in Hedge Fund Market Wizards. Every trader Schwager interviews has a chapter, sometimes several, written in blood. They've lost millions. They've shut down funds. They've questioned everything. And they didn't just bounce back. They transformed. Ray Dalio nearly sank Bridgewater in its early years. He made a massive incorrect macro call, went public with it, and watched his credibility and capital evaporate. But instead of quitting, he doubled down on learning. He created the now famous Bridgewater feedback loop, radical transparency, idea meritocracy, constant postmortem. The mistake became his foundation. Steve Clark blew up so badly, he was locked out of the markets emotionally. He couldn't even press a trade. But he came back by creating rules so strict, so clean, they became a scaffolding for his psychology. He didn't heal by guessing. He healed by rebuilding structure. You're going to lose. You're going to break. But the wizards show you what to do next. Obsess constructively. Review what broke. Identify the flaw. Refine the process. Don't just get up, recalibrate. Most traders run from failure. They hide from it. But the wizards, they dive into it. They autopsy every bad trade, every broken cycle. Because within the pain is the pattern, and within the pattern is the next level. This is where obsession becomes power. When your identity isn't tied to being right, but to getting better, you become dangerous. Think about this. How do you handle a massive loss? Do you spiral, or do you journal, dissect, rebuild? Mark Minervini said it best. The market's not going to change for you. You have to change for it. That's the attitude. No blame, no ego, just pure accountability. And it's not just about recovering the P&L. It's about rebuilding confidence. After a crash, your capital isn't the only thing wounded. Your belief is too. And that belief takes time, structure, and consistency to repair. That's why the Wizards focus on process during recovery. They don't try to win big. They try to win clean, small, predictable. Confidence is restored not through a Hail Mary trade, but through 5 good trades in a row, executed with intention. You've been there. After a loss, your instinct is to make it back. The Wizards fight that urge with systems. They reduce size. They go back to core setups. They shrink the game until they're back in sync. That's how you come back. Smaller, smarter, slower, until the rhythm returns. And here's the wild part. Failure, when handled right, becomes the fastest accelerator of skill. Some wizards said their biggest leaps came after their worst blow-ups. Because in failure, there's no hiding. Everything is exposed. And when you face that, you grow. So start logging your losses like case studies. What broke? Was it emotional, structural, a market regime shift? Did you chase? Did you ignore signals? Build a post-loss ritual. 1 day of no trading. Full journal review. Action plan forward. That's what the pros do. They don't react. They rebuild deliberately. And over time, this turns you into something rare, a trader who doesn't fear failure, but uses it, because failure is guaranteed. But growth? That's optional. So ask yourself, when the crash comes, and it will you spiral or will you upgrade? Because the market wizards didn't just survive failure, they used it to forge greatness. And that mindset, evolution over ego, is what sets them apart. Next, you'll discover something that might surprise you. These legends didn't get more complex as they grew. They got simpler, cleaner, sharper. That's where true scale lives. Despite their size and success, the market wizards simplified over time. They didn't add more screens or strategies, they cut them. They focused on what worked. They trimmed the fat, and that's how they scaled, through clarity, not complexity. You think scale means bigger? More monitors, more tickers, more exotic trades? That's rookie thinking. What Schwager reveals in Hedge Fund Market Wizards is that the greatest traders, once they find their edge, don't expand, they narrow. Take Mark Minervini. His process isn't complex, it's focused. He trades a select group of high-momentum stocks with clean breakouts and tight risk. His screeners are refined. His playbook is repeatable. He doesn't chase noise. He exploits one pattern with precision. Cole Moshe said he learned to ignore 95% of what's happening in the market. He only zooms in when something aligns perfectly with his thesis. Otherwise, he does nothing. That's elite discipline. And this is where traders like you and I get tripped up. We confuse effort with effectiveness. We think complexity equals sophistication. But in trading, complexity kills. It adds friction. It clouds judgment. It makes execution harder. The wizards scale by removing what doesn't matter. They know which metrics drive their trades, which setups make sense, which market conditions suit them. Everything else? Gone. And this isn't just about tools. It's about mental bandwidth. The less noise you consume, the more clarity you bring to the chart. The less you react to every signal, the more confidence you have in your own filter. Ever heard the phrase, the amateur adds, the professional subtracts? That's trading in a sentence. You don't need 10 strategies. You need one that works and the ability to execute it across 1,000 trades without deviation. That's what scales. That's what prints. Schwager's interviews show how traders often start wide and end narrow. They try everything. Then they strip it down. The edge becomes what they ignore, just as much as what they act on. This is the process of refinement. So here's your challenge. Open your trading journal and ask yourself, what setups have actually delivered? What do you consistently misfire on? What do you keep chasing that doesn't fit your style? Then cut, ruthlessly. Simplify your watch list. Refine your entry criteria. Reduce your trading hours. Build tighter, clearer execution rules and stick to them. Because simplicity brings speed. Speed brings confidence. And confidence allows size. That's how the wizards scale. They aren't jumping from sector to sector, strategy to strategy. They've done the work. They've failed, studied, rebuilt, and found their edge. And once they lock it in, they press it hard. Larry Benedict said it flatly. I don't need to trade 100 names. I need 2 or 3 that move clean and fit my pattern. That's a professional mindset. And this isn't just about trading style. It's about identity. When you know who you are and what you trade best, you're no longer trying to find opportunity. You're waiting for your opportunity. That's how you move from scatter to sniper, from reactive to intentional, from hoping to printing. So simplify, sharpen, strip it down. Then hit your setup with size, with speed, with total confidence. And when that moment hits, you'll know what it feels like to scale with focus. Next, we close it all. You've met the wizards. You've seen their pain, their power, their process. Now we bring it together, the real habits, the real mindset, the real price of mastery. Let's finish this right. Everything the market wizards built, every dollar, every system, every breakthrough, was paid for in pain, time, and relentless discipline. In this final stretch, you tie it all together. The habits, the lessons, and the mindset it takes to play this game like a pro. Let's be clear, there are no shortcuts. Every wizard Schwager interviewed got cut, got crushed, got humbled. They bled, they burned, they rebuilt. And it wasn't luck or talent that brought them back. It was habits. Habits that built process that built results. And that's where you are now. You've heard it all by now. You don't need to predict. You need to prepare. You don't need to avoid losses. You need to manage them. You don't need to trade everything. You need to own what you trade best. So what are the recurring lessons? Cut your losses fast. Everyone says it. Wizards do it. No debate. No hesitation. Size with respect. Trade within your emotional risk tolerance, not just your bankroll. Process is king. No system survives without structure. Build one. Emotion is data. Track it, manage it, protect your focus. Simplicity scales. You win by narrowing in, not spreading out. Failure is feedback. If you learn from it, it becomes fuel. And here's the hard truth. Most traders will never do this. They'll jump from system to system, stuck in a cycle of excitement and regret. But you're here because you're ready to work, to dig deeper, to trade your identity, your process, your plan, because that's what makes you unstoppable. Schwager's interviews aren't just success stories, they're warning signs. They show you what happens when you get lazy, when you trade emotionally, when you scale too fast, and they show you how to come back from all of it, stronger, sharper, cleaner. The wizards live the trader's life, not the fantasy. There are no Lambos, no secret indicators, no overnight explosions. There's journaling, there's review, there's discipline, and there's a quiet, powerful confidence that builds over years. And that's what you need to build now. Start by locking in your daily process. Pre-market prep, midday review, end-of-day journaling. Use every trade to sharpen your edge, even the small ones, especially the small ones. Track your emotions as carefully as your entries. Know what triggers your tilt, your fear, your overconfidence. Design rules around those. Build behavior into your edge. Read Hedge Fund Market Wizards again, but this time don't just highlight. Copy behaviors. What does each wizard do before a trade? After a loss? During a drawdown? Then ask yourself, am I trading like a wizard or reacting like a rookie? You already know the answer. You've heard their voices. You've felt their scars. You've seen the patterns. Now it's time to decide. Will you commit to the process or keep chasing randomness? Because the ones who make it, the ones who truly master this craft, they don't trade the market. They trade themselves. And when you do that, you become the edge. You've walked through the mindset of legends. You've seen their scars, their process, their edge, and now it's your turn. The truth is, there's no secret system. The market wizards didn't win with magic. They won with behavior, risk management, emotional control, relentless journaling, simplicity, adaptation. That's what built their empires. What you've just experienced isn't a motivational story. It's a blueprint, one you can follow, one you must earn. Because success in trading isn't promised, but it is repeatable if you're willing to do the work. So here's your call to action. Pick one principle. Start now. Build a repeatable process. Review daily. Cut fast. Trade small. Grow slow. Think in probabilities. Think in series. Trade your edge, not someone else's. because you're not here to be a follower. You're here to become your own wizard. If this breakdown helped sharpen your edge, like, comment, and subscribe for more deep dives into trading psychology, performance, and elite execution. Share this with someone who's ready to stop gambling and start operating. The market doesn't care what you believe. It cares what you do. So show it. Execute. Review. Refine. Repeat. Master the craft, and the results will follow.